because I live in a cave, I'm out of touch with contemporary music. Ross Gerber referred to the artist Hozier. I misheard him. Hozier is actually an Irish musician, singer and songwriter whose music draws from folk, soul and blues. Okay, and he's from Bray in Ireland, near where I'm from. Welcome back to Trading Day. Oil is looking at its fourth weekly decline amid fears over the US economy and Chinese demand. We're joined by Andrew Lebow, senior partner at Commodity Research Group. Andrew, it's great to see you. It feels like ages since we talked.
I know. Thank you for having me on again, Andrew.
Thanks for joining us. Now, we just looked at an intraday price chart for oil. No relief. It's near the lowest of the day.
It's been quite the week, actually. We started the week with news of the assassination of the Hamas terrorist leader in Tehran, and traders were buying $100 calls, $110 calls. As bullish enthusiasm and fear over the geopolitical risks of wider war in the Middle East was manifested in the trade, and we've ended the week, near monthly lows. And I think today the market is really caught in the downdraft of the macro.
And it looks as though OPEC Plus is going to have serious difficulty at this stage in increasing production. But do you think they might just as a gesture boost output a bit in the fourth quarter?
Well, that's going to be dependent on price. Do I think they're going to increase? No, I really don't, because the balances, we're always looking at the balances. Fourth quarter looks as though there could be a slight deficit. Should they increase, that deficit is going to go by the boards. So I don't think we're going to see much of an increase in the fourth quarter. The big problem and the big fundamentals, we always talk about it at Commodity Research Group, is 2025, because then they are going to have to start unwinding, and there's no room really for the amount of crude that they want to put onto the market in 2025. So it's going to be very difficult for OPEC Plus to increase production unless demand is booming next year. And I think this is the big problem in the market, and why there's why we're not getting any buying in the back of the curve, because people are fearful about 2025. The rest of this year looks okay. So there's sort of a pull up on price. But next year, really, the balances look like we could have a surplus of 500,000 to 1 million barrels a day.
Are the Saudis happy with the current price of oil? Are they making enough money?
I don't think they're happy in the low 70s. I think that where WTI is now, or 77, where 76, 77, where Brent is, I think they prefer a price closer to the mid 80s or 90s. It's interesting that just yesterday, Alexander Novak, the Russian oil minister, said, okay, these prices they're all right for us. And now for $3 lower, I wonder if this is a price that's acceptable. Certainly the Saudis would prefer higher prices, which is why I'm not sure that they're going to be increasing production, at least in the fourth quarter. But again, for next year, they're going to really have to make the decision: how much more market share are we going to lose to the Canadians, to the Americans, to Guyana, to non-OPEC? And what price are we willing to take? Because the Saudis are the ones who can do most of the unwind. However, there's also going to be an unwind from the UAE of at least 300,000 or 400,000 barrels a day that I think is locked in. I think Russia's going to be increasing production. So along with non-OPEC along with non-OPEC plus increasing production, you're going to have at least two producers from OPEC plus wanting to increase production. And then you have the Saudis having to make a decision.
What's with the UAE? They keep demanding more quota, and they just have a lot of political power within OPEC plus?
Well, they've invested a lot in increasing their capacity, and they feel as though they haven't been able to increase production because of the OPEC strictures on them. And now they've really, they have been really very aggressive about we want this increase. They've taken cuts in the past, and for 2025, they want an increase. Is it political power? Some, yes. Obviously, the Emirates economically are much stronger than they had been, but I think it's trying to just get a return on this investment for new capacity.
And the reality does appear to be that Mr. Putin can get his oil onto world markets, and he's still getting a pretty good price for it.
Yeah, less than what he had been getting, obviously, last month. But yeah, Russian production really has not declined all that much this year. They're probably somewhere, their crude production is probably still 200,000 barrels a day above where they're supposed to be on production. Now, their target is 9.5, is another 300,000. So I'm sure they'll try to get there. It's been interesting that through it all, they haven't, at least for this year, they really haven't reduced production as promised. And I guess that's not surprising.
Just give us your final thought on electric vehicles. We've obviously seen slowing sales growth for those, but they are rolling out. I mean, around the world, people are riding electric bikes, for example, replacing scooters. That's going to improve, fossil fuel scooters, going to improve the air quality in countries like Vietnam. Are we looking at a slow, relentless rollout of electric vehicles? And is that a problem for oil?
Well, sure, it's a problem for oil. That's a long-term problem for oil that refiners and producers have been grappling with. Of course, there is still growth in petrochemical demand. I'll tell you, gasoline. Interestingly enough, here in the U.S., we had a pretty good July because of the extended July 4th holiday. So gasoline demand from May to July was actually not so bad. But obviously, longer term, we're going to continue to lose petroleum market share to electric vehicles. But key, really, I think, to the market right now, Andrew, is diesel. Diesel has been so soft in China. Diesel demand has really weakened. There's been an increased demand for LNG vehicles in China. And here in the U.S., diesel demand has been soft. And we saw, diesel demand is really very well correlated to manufacturing. And we've seen these manufacturing numbers just go low, just moving lower and lower. The PMI this week was a killer for the diesel market. So diesel demand has really softened, and it's become for now a much bigger problem than gasoline.